Hey everyone, stick with us versus herd. If it's your first time here, like the content, hit subscribe. If you want to get notifications when we post videos, tap the bell. And if you haven't yet joined our Discord and our options trading group on Facebook, links are below in the description, along with the link to our options trading live YouTube channel. We moved the live streams to its own dedicated channel. So if you're interested in that, hit the link. Right now, S&Ps are down 46, Dow's down almost 400, and NASDAQ futures are down 169. Getting a little late start tonight. Was downtown with the fam on a school night. You know, we're rebellious over here, so. But no further ado, we're going to get into what we're looking at for tomorrow. Obviously, things are down quite a bit after hours here, and it's mostly due to the growing coronavirus fears. Now the market cares that there's going to be a global economic slowdown. Oil's going to get hit due to the factories in China being closed. Now South Korea is reporting there's 750 people infected. It's the most infected outside of mainland China. And on top of that, they're saying, it says, I've now come to the view that equity markets, global equity markets, have to reprice, take into account, or fully discount the dramatic economic impact that all of this is going to have. I believe that repricing has just started, and I think it's going to be approximately 20 to 25% in the next month or so. So, also, they said about recovery here. Of course, there will be a recovery at some point in time. However, we don't know. Key is we don't know, obviously, what that point in time is. In the earlier days following the outbreak, many economics had predicted a V-shaped recovery, which describes downturns that see a steep fall before recovering quickly. And we know from firsthand in the bullish market all too well the V-shaped chart. You know what I mean? Like here's one right here. But basically, they're saying is they don't know, nobody knows. The market is caring, and it seems like the coronavirus is getting worse before it's getting better. There is no cure. There's no antidote. People are getting sick. Some people are getting better. People are dying. I think the death rate is still at like 2.3%, mostly impacting the elderly, and the market is caring. So, for me, this week is going to be, we're probably over the next few months, we're going to have a lot of volatility. I don't want to see people get sick. I want people to go away, but it's good for options trading. Volatility is good for options trading. High IV is good for selling options, good for day trading. When things are flat, it makes it hard to trade options when things are flat because you don't want to sell a premium because IV is too cheap, and then the stock or ETFs or whatever you're trading are not moving enough for you to make any money. You need those stocks to move so you can capture that delta. Anyways, what I'm looking at, I've been trading the S&P futures a lot. I'll probably be day trading it tomorrow. I don't think I'm going to be holding overnight because, as we know all too well, the market cares and it doesn't care. So let's see what happens and what the price action is tomorrow. The market has been selling off the last couple of days here, and we're on day 3 of a down market, day 2 of a down market technically, but day 3, let's call it day 3. But what I'm looking at here is to retest these lows around 3,200, around 3,224. If we're looking at SPY, I know a lot of people trade SPY. I do trade it from time to time, and I'm looking at like 320, 323 area for support. Right now SPY is at 329, so another 6-point drop. Right now it's down 10 points from its highs. It's at 329. It was at 339. Just a couple days ago, but it really depends on how bad this news gets, and once some data starts rolling out on what impact this has on the global market. So it's going to be really news induced. You want to concentrate on the pricing. Don't get too tied up in what's going on CNBC, what's going on in Yahoo Finance, what's going on elsewhere. Just concentrate on the price action and try to figure out where that price is going to be in the future, so that way you can make money. But for me right now, If we're looking at SPY, I'm looking to see if we can come back down to 322. If a bunch of buyers step in, it's going to be really interesting. I'm thinking we're going to have more down, but who knows? We're still in a bullish uptrend. You still got to keep an open mind. If things reverse, like on Friday, let's see here. At Friday, we were down all day, and we had a couple of pops in here, and then at close, they really ripped it up at close there. Shorts probably didn't want to hold over the weekend because they were we had a 1% down day already, so they're probably thinking like, how much juice is left to squeeze in here? And apparently a lot more juice was left to squeeze, because now we're down even more. The futures are down. S&P futures are down over 1% right now, and the market isn't even open yet. So when the market opens and that volume kicks in, the question is, are we going to go lower? We're going to drop like a rock? Is the market going to stay flat, kind of consolidate, see what this move is going to mean? Or is it going to rip right up and open? I mean, anything can happen right now. Anything's fair game. Once that volume kicks in, it's definitely going to be interesting. But for right now, like on SPY, I'm looking for the lower 320s, and the S&Ps, I'm looking for like 320, 3225, 3220, 3200, and seeing if this doesn't hold. The question is, at what point in time does buyers start to kick in? So there's a lot of fear in the market right now. People are selling, but at one point there's going to be a place where buyers are going to want to step in and say, hey, this is a good value for these stocks, I want to buy. The question is when, how long is this going to go on? And we don't know. So that's why I'm going to be very cautious. I don't have currently any positions open. I had 0 positions going in over the weekend because I just wasn't sure which way we were going to go. Were we going to rip up? Were we going to rip down? And obviously now we know the answer. So I'm going to be sticking mostly to day trades this week and probably selling some premium, because premium is going to be rich. Looking into earnings for this week, I'm definitely, for tomorrow, I'm interested in Shake Shack and Palo Alto, and then Home Depot is on Tuesday before market open. Those are the top of my list right now for Shake Shack. What I'm going to be looking at is what the price action is tomorrow. It was trying to close this gap here from 69 up to 83. Kind of got stopped out around almost 79, 78.50 area. Got stopped out, dropped on Friday quite a bit. So it's going to be interesting to see if it holds 73 or if it is going to go lower. So I'm not sure what position I'm going to put on Shake Shack, if any. Really depends on what the price action is, and I'm going to see what the numbers are pre-market and throughout the day. But I'm going to be very cautious. I'm probably just going to be doing one trade at a time. Probably going to be doing some day trades, and then I'll be looking for some potential earnings trades later in the day tomorrow. And I will be live tomorrow morning pre-market as well. Palo Alto is another one I do like to trade as well. Palo Alto has had some wild swings on their earnings. Right now, Palo Alto, the expected move is $18 plus or minus. So it's been getting stopped out here, as you can see, at the 250 area, and it got hard rejected again. Now it's at 243. Is it going to retouch this? I might be a little bearish on this. I had a really successful earnings trade on Cisco a couple of weeks back, so I'm going to see what I can do on Palo Alto as well. If this can rip back up to 250, might be looking for some shorting, some calls up on here. But IV is, let's see here, IV is only at 77.55, and on Shake Shack, imply volatility for the week. So Shake Shack, it looks a little bit better to sell some premium on here, because this week's 143%. And next week's at 103%. So there's some premium to squeeze out of there. Palo Alto, premiums are not as rich. Home Depot, I do trade quite a bit throughout the year. It's one of my go-to stocks. Premium is not that rich here, but it's currently at all-time highs. Didn't really come down. It didn't really come down on Friday. The only reason why I was red is because it ripped really high at the close on Thursday, and then just was pretty much range bound on Friday. So I'm going to be looking at a position on Home Depot as well. But you got to be careful if you're shorting premium and it goes beyond the expected move. Right now, the expected move on Home Depot is $9 or 10. Let's just call it $10 for this week. So, let's go either going to 235 or 255. I do expect premiums to be a lot richer tomorrow because we're having such down movement right now. Premiums are going to be a lot richer. I'm probably going to sit on my hands at open tomorrow because I want to see where premiums come in, because when we have a big move like this, if we have a huge gap up or huge gap down, the market takes some time to price in the move and figure out what premiums should be. Let some trades go by, let people trade. You don't want to be like, for me, I don't want to be the first guy into the pool and get screwed, right? And the price action gets all crazy. When we have a huge gap down like this and the market wasn't expecting it, like what was the market expecting? Let's see here. Let's look at SPX. So the market was expecting, come on. Okay. So the market was expecting this is SPX, so this is S&Ps as well, a $25 move for Monday, between Friday and Monday, and it's already moved over 40 points. So it's almost 2 times the expected move. So just be mindful that premiums are going to be all over the place. Take your time, focus on entries. Don't just, people get a lot of FOMO and they're like, oh yeah, people are making bags of money, but you can easily get screwed in here. So for me, since I don't have a position on already, I have 0 positions on, I'm going to be taking my time, looking for some good setups, looking for some good entries, and making sure I get good pricing, because I definitely don't want to get screwed on pricing. The number one way people lose in this market is getting options at a terrible price. So that's why you got to focus on getting good deals and know when you're getting ripped off. So if you watch this video to the end, definitely appreciate you. Comment, watch to the end. Let me know what you're trading tomorrow. As always, stay safe, stay green. It's us versus herd.